We have a exciting webinar today with our featured presenter, Andrew. And I myself am from SpeedTrader, where we have an affiliate relationship with Bearable to help provide traders who invest in their trading education with discounted commissions. SpeedTrader has been around since 1999, and what makes us different than your other traditional brokers is that we're dedicated to active traders who are doing, for example, 100 trades a day, 500 trades a day. I've seen as much as 3,000 trades a day. And because of the tools that we offer by way of trading platform, low commissions, direct access trading, we become the difference of how a broker can help you take your trading to the next level. The power of direct market access is that there's less intermediaries between your order and the market. Whereas many traditional brokers trade against you, we do not. And generally, if you ever think about it, whenever there's an intermediary involved, it's usually an added expense or cost or detriment to you. And in our case, that's where we're a step above. Your order goes to the market, not an intermediary, helping you to get faster executions and better fills. As far as commissions, as a promotional offer that's exclusive to the client of Bearable, you have $295 per trade or 39 mils on the transaction side, which will help to get you money in your pocket versus a higher priced broker that offers features that you don't even benefit from. We also offer our traders third-party locates so that if there is a stock that's very hard to short, we have higher odds of receiving those shares so that you can have the ability to take advantage and take those trading opportunities. By way of platforms, we offer Sterling, which is world-renowned, and Dash Trader, which is also world-renowned. And we have these tools available to help you take your trading to the next level. And with that in mind, to help your trading go to the next level, I'm going to hand off to Andrew. He can tell you more about the VWAP and how these different tools, as you invest in your well-being or in your financial well-being for the trading markets that has many other professionals, I'll let Andrew guide you into the ways that he can help you reach your dreams.
All right, guys, so everyone should be able to see my screen. I just thank SpeedTrader for giving us this opportunity. Definitely, SpeedTrader is one of our preferred brokers, and some of our traders who are using it, they're really happy with the execution and the speed, and also very competitive commission rates that they're offering for us. So today I'd like to about myself, a little bit about our community, and we'll talk about how to trade based on the VWAP. But before that, just a disclaimer that we are not, Bearable Traders is not advisory service. We are not registered with any financial regulatory body. We are not a broker dealer, and we never tell you what to buy and what to sell. And you should definitely talk to a qualified advisor before using our services or consider trading with Bearable Traders. For those of you who came as an appreciation, we would like to offer one lifetime membership in our community. At the end of the presentation. So if you stay with us, we'll randomly pick, SpeedTrader randomly pick one of the attendees, because I can't see the list of attendee people. And everyone who comes here, you have 14 days membership in our community for free. You can come 2 weeks, hang around in our community and see how it looks like. And also you can download my, How to Day Trade for a Living book. That is right now one of the best-selling books on day trading. So my story was, I came up from a country and it's a culture, a society that you should study all the way to the end. So I spent 24 years in a school and I got my PhD. I had a very good school in Canada, and then I went to work. I was really happy. I was really proud of all of the achievements that I had. And then very soon I got, laid off. I was let go, and I was so proud of my achievements and the work that I had. Is on a climb that I had in Nepal, trying to go to Everest in 2015. I actually took the flag of the company that I was working with, and I wanted to have that flag on top. That was in 2015 when Nepal had the earthquake, so we had to come back. I was there during the earthquake, and I came back. A few weeks after I came back to work, I was let go because the company was downsizing. So it was a moment for me. That moment, I realized that really I have to do something for myself. I can't really rely on a corporate 9-to-5 job. That's why I decided to, day trading. When I was a student, I really didn't have any money, so I really didn't have that problem of growing my money or how to do with my money. But when I started working, I started saving a little bit of money, and then that was the time I started to messing around with market. I was doing swing trading most of the time. I got lucky in a bull market in pharmaceutical companies. I was just buying pharmaceutical companies, and every morning it was going up, and I was really, I was thinking that I'm so smart that I figured out the market. The bull market of pharmaceutical companies collapsed, the biotech bubble collapsed, and I lost a lot of money. That was the moment that I told myself I'm not going to do swing trading. I just don't have the nerve to sleep and overnight fluctuation of the stocks. I just couldn't handle that. I decided to do day trade. So at the end of the day, I'm all cash. My position are all in cash, so that I don't have to worry about fluctuation. It's just not for me. I don't have the personality. I looked around. I tried to find a good education, but I found really no useful guide for traders. There was a lot of information and a lot of good books and courses out there, but there wasn't nothing that walked me through everything from a broker, from a platform, hotkey indicator, something that really concise and walked me through. So during ups and downs and all of the money that I spent on education, at the end I decided to write the book myself. I was writing always papers, patents, conference journals, and scientific journals. I decided to write something that's actually useful, and more people are actually reading that. And then when I was trading alone, I realized that it's really difficult. Emotionally, it's overwhelming, and it's also really boring. Day trading is really boring. You have to look at the charts for a long time until you find a good opportunity to trade. That's why I decided to create a community, the Variable Traders community, because being in a community is really important, and it also has a huge effect on your success. If you have any question, who do you ask your questions? I mean, there's a lot of people who are there to answer your questions, help you to get better every day. We don't have a big community. It's a relatively small community, and we would like to keep it like that. We don't want to really be a big community that we lose the personal touch between people. But it's a worldwide community. We have people all across the world. I can see people who are logged into our website from what countries are they, and as you see, we have a lot of people from all across the world. In our community, we focus on our education in three aspects: the mechanical aspect, like the broker, platform, hotkey, scanners, newsfeed. And then there's a technical aspect, that how to find the stocks every morning, what are the strategies, risk management, position sizing, getting in and out of trades. And then on the psychology, we also try to emphasize on the psychology of trading. And I believe if there is really such a thing as secret to the nature of trading, this is it. The psychology is the secret to the nature of trading. Talking about tools, we find our stocks in play usually with Trade Idea scanner that we have. Most of the members have that. I also have that, or I share my scanner with the people. For broker and platform, you're using DUS platform. Some of the, many of our users are using SpeedTrader as the broker, and some are using other brokers as well. DUS, I think, is one of the best platforms that are available out there for day trading. And SpeedTrader also supports DUS trading platform. In terms of indicator, I use very simple indicator. I use only 4 moving averages, 9 and 20 exponential, and 50 and 200 simple moving average on my chart. I do have the VWAP, is the volume weighted average price, which I'll discuss that later during this presentation. And I do have support and resistance levels that we find usually during the pre-market evaluation of the stocks, usually come from the daily chart. And then I personally trade based on a 5-minute chart. So 5-minute is my main chart. Most of my trading decisions are based on 5-minute chart. I do look at 1-minute chart as an additional, sometimes getting a good entry. And I look at the daily chart to finding support and resistance levels for my trading. As you see, I don't really use any complicated trading indicator, and I don't believe to have a lot of indicator on my chart. I strongly believe that people take day trading more complicated than it really should be. I really believe in that people shouldn't take that very complicated. My strategies, I have a couple of strategies that I'm trading. It mostly depends on what type of stock I'm trading. I'm personally trading medium float stocks. These are the stocks that have a float of between 20 million to 500 million shares. The price range usually it's 10 to 100. I mean, that's the really price range that I like to trade, $10 to $50. And these stocks are really good for VWAP trading. If you're trading, for example, a low float stock, these penny stocks that move really up and down, the volume weighted average price is really not that accurate and useful on those as they're useful on these medium float stocks. So every morning when we are actually scanning our scanners for the market to find opportunities for trade, we also take a look at the float of each stock, because it's very important for you to know what type of a stock are you trading. And if you don't know what type of a stock are you trading, that results into the inconsistency. People lose big on these penny stocks and then gain a little bit on these medium float stocks, and then they're wondering why they're inconsistent. Well, the reason that they're inconsistent is because they're not trading the same thing. Every day they start trading something, and that's really have an effect on your inconsistency. I am personally really comfortable trading medium float stocks, $10 to $50, $10 to $50 per share. That's the perfect range for me, and I really like that. So today, I'd like to talk about the VWAP. There are 3 strategies that I have used for VWAP, and I'll later go through the examples. These are the names that I coined for this strategy. I'm sure other traders are using the same strategy, but they have different names. Again, these are not a universal name. These are the names that I use and traders in our community use to refer to some sort of a certain patterns. But of course, other people might have different names for them. My trading course education is available on my website to download for free. There are 4 classes. Each of them is about 1 hour. You can download the PDF, the presentations on the website for free. Just go to our website. There's a live class, and then you can download those for free. Because I believe in the open course concept. Most of the biggest schools like MIT or Harvard, they're all provided their courses for free. You can just go and see what courses they're offering and download all of the material. Of course, you have to pay to get into the university to work with the professionals, but the information, I believe, should be really free. I do update these courses time to time, so if you download them, maybe come back another month or so to see if I added more examples or updated the course material. And now that we are getting into more technical stuff, if you have any questions, feel free to type in. I think I should be able to see your questions. If it's relevant, I quickly answer that. If it's not relevant, maybe we can stay at the end of the presentation. If it's time available, maybe we can answer those questions. So VWAP is the volume weighted average price. Is the most important day trading indicator in my opinion. And it's on my opinion. There is a lot of traders, successful traders, day traders that they don't use VWAP. But in my opinion, and based on my strategies, VWAP is really important. And VWAP is only an intraday indicator. It's only for during the day. We don't have any VWAP on daily chart or weekly chart. So swing traders don't use VWAP. If you go to the daily chart, you don't see anything. VWAP is very important because for institutional traders, they're looking at the VWAP. The managers at the end of the day, they review their traders based on the average field price versus VWAP. So if you are an institutional trader and if you want to buy 1 million shares of Apple, you can't just press a market order for 1 million share because the market is not liquid to get that. You don't get filled like that. So the trader has to fill the order during the day based on the best prices that it can get filled. And at the end of the day, he says, okay, I got filled 1 million shares, and this is the value of the VWAP, and the trading performance is based on the VWAP at the end of the day. That's why when the stock drops below the VWAP, then that's the institutions start accumulating shares, because anything below the VWAP might be a good buy, or if the stock goes way above the VWAP, maybe that becomes a good sell. If you have a large position, you can dump your shares above the VWAP. That means that you're selling at a price higher than VWAP, and that's usually a good feel for someone who wants to sell the shares. This is an example of Walmart. This is a recent trade that we did. This is actually for May 17th. And this is just an example of the direction of the stock compared to the VWAP. As you see at the open during the morning session, the stock heavily sold off. This is the moment that institutionals are dumping their shares. If someone wants to get rid of the position, as they're trying to dump their shares as much as possible because the price is very close to the VWAP. And then when the price goes way away from the VWAP, that's usually you will see a reversal, because when the stock drops below the VWAP too much, then it might become a good deal for some of the institutions. Then institutions might start accumulating shares because the VWAP, they're getting a price at much lower than VWAP, and that might be a good deal. At the same time, if you're still a seller, you might want to stop selling because you don't want to really get a really bad feel below the VWAP. You might want to wait until the price comes back up to VWAP, and then you start dumping your share. As you see, this is the situation here. When the stock dumps here during the late morning session, after usually around 10 o'clock, the people who were shorting here, now they're covering, and at the same time, the big buyers are not, big sellers are not selling anymore. The stock comes back to the VWAP, and then that's the moment that again institutions start dumping their shares, because the price now is getting really close to the VWAP. And as you see, the VWAP value usually stays constant during the day after the morning session, because VWAP is an accumulative indicator. So most of the volume is at the morning session, and that's why the morning session is defining the value of the VWAP. During the mid session and afternoon to the close, the VWAP value is somehow constant. Now, how we can actually, I haven't said any strategy yet, but I just wanted to show you, the behavior of the stock toward VWAP. I'll later jump into the strategies, and they'll teach you how actually we can actually make a trade based on this behavior. This is again another example. The example that I showed was when the stock is dropping below the VWAP. Sometimes the stock opens really strong, goes above the VWAP. This is the moment that institutions are buying, because the price is really close to the VWAP. So the big orders to buy would come. The stock goes up, and then the sellers might jump in, and short sellers are jumping in, and the price goes back to the VWAP. And test the VWAP might come back up, might keep going down. And this is the moment that means there is really no big buyer anymore, and now the only sellers and short sellers are left in the market, and then the stock would go down during the late morning session and toward the afternoon session. And sometimes the stock pops above the VWAP and then drops below the VWAP and then continues going down. This is what I call a false breakout. Again, this is the same behavior. Stock sells off and then bounces back above the VWAP, then comes down below the VWAP. Here, this is the moment that people start accumulating shares, tries to go above the VWAP a couple of times, eventually breaks above the VWAP, but it can't establish a trend above the VWAP. This is what we call a false breakout. It can be to the downside or it can be to the upside, depending on, it could be either way. False breakout is when you break above the VWAP, but price is not as strong enough to establish a trend, or it's not weak enough to establish a downtrend, and that's usually comes back below the VWAP or vice versa. And we discussed that later during the examples that I have. Again, I haven't said anything about the strategies yet. We get into the strategies. I just wanted to show you the overall behavior of stocks in play. This is Bed Bath & Beyond last year. I mean, these are the famous companies that we all know. But how I use VWAP for day trading, there are two ways that I'm using VWAP. The first one is I use VWAP as a support or resistance level, and I use VWAP as a potential profit target or stop loss when I'm trading other strategies. For example, if I'm trading opening range breakdowns or breakups, I use VWAP as a potential stop loss or profit target, which I show examples. And then I have three strategies. VWAP reversal that happens usually during the open session when the volatility is really high. One of my friends in the chat, Brian, he calls it double bottom or double top. As I mentioned, these names are really coined by us. It's not really the universal names. So if you Google and you don't see any VWAP reversal, don't get surprised, because this is just a name that I put on this strategy. Other people might have different names for them. And VWAP false breakouts, that usually happens during the late morning sessions or early afternoon. And then VWAP moving average trend trades is another strategy that happens usually in the afternoon and late morning. And I'll go through the examples and show how we actually trade those. As I mentioned, I use VWAP as a potential stop loss or profit target. This is an example I was trading last year in September. I was trading JWN at the open, stock sold up. I went short and I added more. Don't ask me why, because I have no idea what I was thinking when I went short. And the stock bounced back against me. And as soon as it went above the VWAP, I got stopped out. I'm not saying any strategy yet. I just want to show you that when I went short, I had VWAP as a potential stop loss. As soon as it closed above the VWAP, I got out with a loss. And I'm glad I got out, because if you don't get out, sometimes you have to accept a very, very heavy loss. This is another example. This is this is in January 2018. This year we were trading. Again, I went short below the VWAP after the first 5 minutes. Don't ask me why. That was, again, really bad trading mistake that I did. As soon as it came above the VWAP, I got stopped out, and I'm glad I got stopped out, because look at this squeeze. It stuck from $21, squeezed back all the way to $25. If I were not getting out, I would have probably got a margin call by my broker, because that's a very, very big squeeze up. These are the examples that I talk about how I use VWAP on other strategies as a potential profit target or stop loss. Now let's talk about the strategy, the real strategies that I actually trade based on the VWAP. The first one is called VWAP reversal. That usually happens at the open. By open, I mean 9:30 to 10 a.m. If stock in play, if our stock that we have identified for trading, if it's weak and it's trading below the VWAP, but it fails to make a new 5-minute low, that's usually the time that the stock is bouncing back and testing the VWAP. This is what I call a VWAP reversal, and you can possibly take a long position below the VWAP with the first profit target of getting into the VWAP. The opposite is also true if you want to short sell. If this stock is strong above the VWAP, but it can't make a new 5-minute high, this is a possible short trade back to the VWAP and potential trades below the VWAP. This is happening usually after the opening range breakdowns or breakups. Stock might do opening range break up or break down, and then this is the reversal that is happening after that, and you can actually take it, you can take a trade opening range, and then later you can take a reversal on that. There's nothing wrong with that possibly. So this is an example. This is JD. This is last year November we were trading it. The stock sold off really bad at the open below the VWAP. The blue line on my chart is the VWAP. And as soon as I saw the stock has failed to make a new low, so if you can, this is a 5-minute chart, JD couldn't make a new low. And the stock went back. I realized that this might be a potential reversal with the first profit target of VWAP. So I got an entry on the long position here. And as you see, the stock is squeezed above the VWAP. You can scale out of your position. For example, the first target could be VWAP. And then we had also this 42.23 level, which we found in the pre-market. And I wrote the momentum all the way to 42.23. So this is a VWAP reversal trade that I took. What was the entry? The entry for me was the stock really failed to make a new 5-minute low. I mean, the stock is really weak, but it can make a new 5-minute low. There is a really good chance that you can take the trade to the reversal. Not all of them are really tradable. If you can find a good risk to reward opportunity, I mean, I usually take these trades, and they're really very powerful trades. And this is the moment that the institutional traders are starting buying, and also short sellers who shorted the momentum here, they have to cover, and that's the moment that the stock is squeezing back up. This is a real example that we took. I think this is for March, a few months ago, 2018. A stock DLTR sold off heavily below the VWAP. As soon as I saw the stock fail to make a new 5-minute low, I took the trade long here, put a stop loss around here, and I was really hoping to get to this moving average. And that was giving me a decent risk to reward. I mean, usually a risk to reward 2 to 1. The stock, as you see, squeezed above the VWAP, and I sold my position toward the VWAP. This is the same chart, the same trade, but now you can see that on the 1-minute chart, the stock sold off. I went long as soon as I saw that it's showing some strength above this 9 moving average. I put a stop loss toward the low of the day, and then as you see, the stock is squeezed up with heavy volume, and I sold toward the VWAP. Did bounce back, and eventually, tested VWAP again, and eventually, I don't remember what happened after that. More examples, and this is a so this is a long trade that I took for $400. I later took the trade to the short side as well, but it's not shown here. This is another one. This is Symantec. This is actually very fairly new. This is for a few weeks ago. So Symantec was really weak. It was really weak, sold off really bad. I didn't get a chance to trade it as an opening range breakdown. So this could have been a really nice opening range breakdown for a short side. But because I couldn't take that trade, I realized that the stock couldn't make a new 5-minute low. That means a sign of a strength. I took the trade to the long side. That was a very decent risk to reward for me. I was really hoping to get at least to VWAP and later to these moving averages. The stock, squeezed up. I sold, slowly scaled out toward VWAP, and later we popped up above the VWAP. And I hold a little bit of my position to go back up to this moving average. But later the stock came down and I got out at the VWAP. So what usually I do is when I take some of the position, I bring my stop loss at the break even. So my stop loss was here, but I realized that, okay, it's going to lose the VWAP. So I got out the last piece that I had here. And that was, that's a trade that I took. And you see by 10 o'clock in that day, I was done with a very decent profit here. This is the same trade, but on a 1-minute chart. Again, this is a trade that I took. I was really hoping to get to this moving average because that could be a profit target. This is the trade that I took, but again, I went long here. We did drop, but my stop loss was toward the low of the day. I didn't get out, and as you see, the stock is squeezed back up, and I started scaling out toward the VWAP. This is another trade. This is also a recent trade a few weeks ago. This is May 2018. This is VIPS. VIPS was really weak below the VWAP. As soon as I saw it failed to make a new 5-minute low, I went long. I added more to my position, popped up toward the VWAP. I was really hoping to get to these moving averages as a potential target. Popped up from 12 to 12.25, something like that, and it starts scaling out of my position. As soon as I made a new 5-minute low, I got out because my stop loss, when I'm taking profit, my stop loss is at break even. So now, my initial stop loss was here. When I took some profit, I bring my stop loss to break even, and then as soon as I saw it's coming back, I got out. But this turned out to be a false, downward move as came back up. I went long again this time. To getting to the profit targets that I had. So sold some here and sold some here, as you see in this. I wasn't really patient enough, but as you see, the stock really did get into this 50 simple moving average. Those are the examples that I took on the long side. You can take the same trade to the short side as well. This is actually for today. This morning we took that trade. So the stock was really strong, B-I-L-Y, Billy. The stock was really strong, and then it failed to make a new 5-minute high. So there was a potential to take a trade to the short side here. I should have gone short here because when the stock failed to make a new 5-minute high, I kind of couldn't get a good entry. I went short right at the VWAP. As you see, the stock really dropped toward these moving averages that we had. So this is 9 moving average, this is 20 moving average, and this is 50 moving average. Again, I didn't get a good entry. I should have got a better entry above the VWAP, but as you see, the stock dropped all the way to this moving average, and then it bounced back. This is another trade that I took. SQ was really strong at the open, went up, and then as you see, for 15 minutes, it failed to make a new 5-minute high. There was the opportunity here to go short, or everybody in this candlestick could go short, and for a potential drop to the VWAP, and you could, take your profit at the VWAP. That was a really nice reversal that I took. I think I took that trade. I went short here, put a stop loss above the high of the day, and that gave me a really good risk to reward all the way to the VWAP. This is another trade that we took today. No, it was today. No, this is for last year. This is MU, and as you see, MU I'm talking about this trade that I did. So as you see, the MU here failed to make a new high, so the stock was really strong at the open. When we had this 32.95 daily level as a resistance, it couldn't. It tried to break this level for about 20 minutes. It couldn't. As you see, these two candlesticks, it couldn't make a new high. That's a sign of weakness. You could go short anywhere around here, put a stop loss above the VWAP, and your first target could be VWAP, and then you had all of these moving averages and this daily level for a potential target. I couldn't take a trade of much better entry. I kind of chased it. I went short here, dropped to this moving average cover and this level cover, and the last piece I got out here. The stock bounced back again, and this is a false breakout that I later explain, and I later go the next strategy, explain what it is. But the trade that I want to mention, that this is the VWAP reversal that I took. The second strategy that I trade is called false breakout. And again, these are the name that I coined myself. Other traders might call them differently. When the stock is strong, we expect it to establish an uptrend during the day above the VWAP. Or if the stock is weak, we expect it to establish a downtrend below the VWAP for the rest of the day. And this is an example. For example, Solar City, the stock was strong. It did some reversal at the open, but eventually during the midday after 11, it kind of found its way all the way up to the close, all the way by 4 o'clock, found through the uptrend. But sometimes the stock comes above the VWAP, but it can't really establish a trend, and then it loses the VWAP. That provides a short opportunity, back to where it was at the open. So for example, if I see this during, look at the time of the day, it's between 10 to, during the early afternoon. If a stock comes above the VWAP, but it can't establish an uptrend, that's a potential short opportunity. Because what you look as a day trader, you look for weak stocks to short, and you look for strong stocks to ride the momentum to the upside. Now, when I look at this, I see AOI, there is no strong buyer, because if there were some strong buyer, the stock should have come above the VWAP and established an uptrend. The buyer is gone, and everything is left only sellers or short sellers, and that's why I go short. There was a short opportunity here. You could go short, put a stop loss above the VWAP, and then you could ride the momentum all the way to this 43.27 level that we have. Let me go through a couple of examples so you can see this false breakout more clearly in the chart. This is the trade Target. This is last year we traded Target. Target, from a reversal back above the VWAP, but it really couldn't make a trend. We were expecting it to establish, at least consolidate above the VWAP and then moves higher. But when it drops below the VWAP, that's the opportunity. This is what I call the false breakout. Now we're getting into the, about 10:30 all the way to the early afternoon. This is a good short opportunity. I took the trade to the short side. I put a stop loss above the VWAP. I told myself if the stock was strong, it would have stayed above the VWAP. But the stock is not really strong, so I took the trade to the short side, and the target could be, for example, this level could be target, and this 200 simple moving average could be a potential target. And as you see, huge drop, you could cover some, and if you were patient enough, the stock eventually did hit this 200 simple moving average. More examples. This is actually the same trade. Sorry, this is the same trade. This is a real screenshot that I took when I was trading. I ignore this trade. The first trade that you see, this is an opening range breakdown. I went short, dropped. We had this level 55. I covered some, and then I got stopped out the last piece here. So this is I covered half, and then I got stopped out everything else. But that's not the trade that I want to talk. This is a trade. This is the false breakout. As you see, the stock dropped. I went short here, and the low of the day, and this level was the first target for me. And I rode the momentum to the downside, and I covered my shorts here. I wasn't really patient enough for this 200 moving average, but as I show you in the previous slide, the stock actually did go even sell off more. This is another example, JWN. JWN sold off heavily at the open, bounced back, squeezed above the VWAP, but it really couldn't, break this 20 moving average. This is a 20 moving average. Really couldn't drop that, and then it tried to push above the VWAP for about 25 minutes. It couldn't. As soon as you saw that it's actually losing the VWAP, you had the opportunity to go short all the way to the low of the day. Low of the day by that time was 41.52. This is the low of the day by that time when you go short, and you could potentially cover it here. Or if you are not patient enough, you could eventually, cover it here as well. That's also another opportunity. And you can put a stop loss above the VWAP, and sometimes it does come back up. I mean, like any other strategy, you must have a stop loss because market, the uncertainty of the market sometimes you can stop you at, and that's fine. I take that trade to the short side. I put a stop loss above the VWAP. Even if I got stopped out, that's okay. There's nothing wrong with my strategy. I mean, that's why I'm always looking for a good risk to reward. So I have the opportunity to make more money than getting stopped out. And as you see, I don't color code my moving averages because I really don't need to. I use 9, 20, and 50 and 200 moving average. And the one that is smaller is this, the closer to the price. So I can say easily which moving average is which one. The one that is, hugs or kiss the price faster, this is this 9 moving average. The next one is 20 moving average. The next one is 50, and then 200 is not in this chart zoom. So I really don't need to color code my moving averages. I can see because the one that is smaller, it just hugs the price more often, kiss the price more often. This is another example of a false breakout. This is a perfect example of a false breakout. This is back in 2017. So I took the trade to the long opening range breakup. So I took the trade to the long. We had this 44.65 level. I really wanted to sell here, but I didn't. But that's not the trade that I want to talk about. The stock came above the VWAP, and then it dropped below the VWAP. I saw that it's really weak. I went short. I put a stop loss above the VWAP. And as you see, the low of the day by that time, that first 5 minutes, the low of the day was 42.62. So I covered toward the low of the day, as you see, the stock even sold off even more. So this is what I call a false breakout, because if the stock was strong, it should have established a trend to the upside. But when it loses the VWAP, it means that probably there is a big institutional seller, they're dumping their shares, and then the stock might even go further below the VWAP. This is another one, Adobe. This is the Adobe, we were trading it last year. Again, the stock sold off, made a new low of the day, bounced back above the VWAP, but it really couldn't let this 20 moving average go in the chart. As I saw, this is a potential drop. So as soon as it drops, I think I take the trade to the short side around here, but you could even wait. You could even wait for this 5 minute candlestick, and at any pullback, you could go short, put a stop loss above the VWAP, and the potential target could have been this 200 simple moving average on a 5 minute chart. The stock dropped, you could take the cover. First target could be the low of the day. We cracked the low of the day, and the stock even sold more, all the way to this 200 simple moving average. This is Bed Bath & Beyond. This is a false breakout. Again, the stock tried to go above the VWAP. It couldn't. It couldn't establish a trend. Lost the VWAP. As soon as you see it loses the VWAP below all of these moving averages, there is a potential you go short. Again, as a retail trader, you just look for weak stocks to short. And this is a weak stock because it tried many times, tried to go above the VWAP. It couldn't. This is a false breakout. You could go short, and the first target could be low of the day. That could be your first target, or I don't remember where was my last target here, but at least the first target could have been the low of the day. So that gives you a really good risk to reward for the your first target. This is another one, AA. So the stock is squeezing up. This is a false breakout. You could take the trade to the short side for the low of the day. In this case, you probably get a stopped out here because the stock couldn't make a new 5 minute low. It couldn't make it to the low of the day. You would have probably get a stopped out, or you might have covered some here, and then you get a stopped out at the break even. But this is the second false breakout, and this is actually a much more stronger signal for me. When I see the stock has two false breakout, it means that it already tried once, failed, already tried twice, failed, and now I go probably short, this time much heavier with the bigger size, because I have the confidence this time that it probably goes to the low of the day. So even if you take the trade to the short side here and you get a stopped out, still I go back in there because that's okay. I get a stopped out, and this time I go heavier because I can see that the second false breakout, and then I'll go toward the low of the day. That moment was the low of the day, which this low of the day turned out to be actually the low of pre-market as well. Sometimes low of the pre-market is really useful for profit target. This is another example, MU. We discussed this reversal and MU, but now we want to discuss the false breakout. As you see, the MU comes back up. I didn't take this trade, with a good entry. I should have gone short here, put a stop loss above the VWAP, and we had all of these levels as a potential profit target. The stock was really weak, sold off all the way down. I kind of chased it. This is a really bad trade that I think the risk to reward was really messed up. I'm not proud of this trade that I take, because the risk to reward wasn't really favorable for me. But as I just wanted to show you the concept of false breakout. The stock came up, wasn't really, it didn't even try to establish a trend. It just sold off really bad. You could go short and you could put a stop loss above the VWAP, and you had all of these levels as your potential profit target. And the last strategy that I want to talk is the moving average trend trade. As I mentioned, the stocks in play, they either hold the VWAP or they lose the VWAP during the late morning in the afternoon session. And that's the moment that the stock goes up or goes down based on the moving averages that they have. And retail traders like us, we can just write the trend of the stock during the midday based on the 20 moving average and 9 moving average that we have. If you see the stock during the day, hold, in this, as you see, the stock really was strong during the day, never lost the VWAP. It tried to go below the VWAP, never lost the VWAP. Now this is the time that you can go long and you can write the trend with the moving averages all the way during the afternoon session. So what I do in this session, in these cases, usually, so this is the case that a stock is doing a false breakout, come down, tries to go above the VWAP. It's already 12 o'clock. I know a stock is not already done. If he really wanted to go above the VWAP, he would have gone above the VWAP. Now I go, short. Initial stop loss I put above the VWAP, and when the stock moves, then if I have any target, I cover my shorts. If there is no target, you can write the momentum with the moving averages, or you can either use a trailing stop, or you can just look at the moving averages. In this case, the 9 and 20 moving average are really a good guide. The stock tried to go above the 20 moving average, but never let the 20 moving average go, and see all the way to the close, the stock sold off during the day. So if your stop loss would have been a break above the 9 moving average or 20 moving average, you would have probably right the trend. As you see, sometimes the stock tried to go above the 20 moving average, but it really never, candlestick never lost the 20 moving average. And I'll have more examples to really clearly show that for you. This is, again, another example. This is GoPro back into summer 2017. The stock lost the VWAP by 12 o'clock. We know that the stock is weak. If it really wanted to go above the VWAP, it would have gone by now. Now it has no place to go except down. So I probably go short here. I put my stop loss, initial stop loss above the VWAP. As soon as the stock was going towards some levels, I start taking my profit slowly. And then I put my stop loss, either a trailing stop loss, or I can just watch this 9 and 20 moving average and see how far we can just stretch this short trade. This is another example. This is target. As you see, there was a false breakout. You could write the trade to the downside, but as you see, the stock later never came back up above the VWAP, and you could go short. This is a 20 moving average. You could let your short position move all the way down to the close. That's all the way to 4 o'clock. Stock never really lost the 20 moving average. It did pop up. You probably would have stopped out around here, but it still was a really nice short trade. And of course, as a trader, you should scale out during the day to protect your profit. This is another one, Facebook. Facebook was also strong. This is for March 2018. This is a recent trade. As you see around, this is the time of the day at 12 o'clock. The stock was above the VWAP, really strong. We don't even see the VWAP in this chart. And it's moving, in a 1 minute chart, very powerful move to the upside from 169 all the way to 173. And it never lost the 20 moving average. So if you get into a trade above the VWAP and you could let the momentum ride and hold the trade all the way to the close, then you could really capitalize on these moves. This is the same chart, but on a 5-minute chart. The previous one was on 1 minute. As you see, the stock did a lot of up and down at the open. It never lost the VWAP. As soon as I saw it hold the VWAP, you could see during any pullback, for example, as soon as I saw the 9 moving average become a support, I can take a long position, put a stop loss below the VWAP, and you can see the rise the momentum all the way to the afternoon session and maybe close. I personally do not take these trades much because I personally finish my trading in the morning session. I have a daily goal and I take my profit and I run away, shut down my platform. But this is, for example, a trade that I took JCP. I traded JCP a couple of times and lost money. I went short, I got stopped out above the VWAP. I went short again, I didn't cover here and I got stopped out. But eventually I saw during the afternoon session, I saw that the stock is lost the VWAP, so I decided to go short and I put a stop loss above these moving averages. And as you see, the stock eventually dropped to 268 and I covered my position here, and even further went down all the way to 250. But I just wanted to show you that look at the time of the day and look at the way that I traded compared to the VWAP. It lost the VWAP for about few hours, tried to go above the VWAP, it couldn't, and then eventually lost the VWAP and went down all the way here. Another trade was Walmart. So these are the same chart, but this one just shows the full day. So at the open, sold off, and it did bounce back to the VWAP, lost the VWAP, and then sold off all the way. So this is a trade that I took. I took at around 11 o'clock. I went short. I put a stop loss above these moving averages, and then as you see, the stock sold off on a 9 moving average. Never break above the 9 moving average. Eventually, I got out of my position. We also had a level around here, so I think I went short somewhere around here, and you could put your target at the low of the day. So if this is the low of the day, you could really stretch it all the way to the low of the day. As you see, the volume has actually increased at the low of the day as well. So these are the 3 strategies that I'm taking. I teach them in the class, and every day we are taking these strategy in the chat room. As a summary, again, I just discussed about these 3 strategies: VWAP trading, VWAP reversal, false breakout, and the moving averages. Something that is really important to remember is these strategies are working only on medium and large float stocks. Don't try to trade the VWAP false breakout on a low float stock or moving average trend, because these low float stocks are really they have their own board. They are really volatile, and volume sometimes really dies on them, so they don't stay in play all day. But these stocks are really staying in play, and there are really a lot of opportunities to trade. And remember, these strategies work only on the stocks in play. Not only if you go randomly type in a ticker and start trying a false breakout, 100% you lose money on that, because stocks have to be active that day. Stock has to be stock in play. Like for example, Facebook example that I showed, Facebook had a lot of fundamental catalysts because of the that data breach that they had. So the stock was really in play, or my MU is right now really active because of the whole semiconductor and sector is really moving every day. MU is in play. So it's really important to have this strategy on the right type of the stocks. People are always asking me which one is the best strategy. My answer is they're all good as long as you know what the strategy you really as long as you are actually trading them on a really good stock in play. If you just pick up a bad random bad stock, then you probably lose money on them. That's it. That's the end of my presentation. I wanted to thank you, everyone. Questions, if you have any question, I mean, we might have some time, or you can email me, andrew@bearbulltraders.com. I promised the free book for you. The book is right now free on Amazon. You can just go, and it will be free tomorrow as well. I'm not allowed to distribute the PDF version of the book because of the legal agreement that I have with the publisher, but we put the book right now free on Amazon.com. Just go search my name, search the title, and you can see the Kindle version is $0, and you can download it on your computer, your PC, whatever that you have. You can have it on your PC. But again, I'm not allowed to distribute the PDF version of the book, but book is free today and tomorrow, and you can download the book for your devices. And feel free to share this information with other people. If they want to go and have the book, they can go and download the book. As a token of appreciation for you staying in this seminar, I don't have the list of attendees, but maybe someone at the Speed Trader can pick up someone, and maybe if you want to announce the name now, and and then later email us and email the lucky winner. But everyone who attended this webinar, you're welcome to go and check our community for 14 days for free. No obligation, nothing. You can just go and have 14 days, in our chat room and in our community. Use the Speed Trader 14 discount code. Just go to our website. There are a bunch of levels. If you go to the basic level, there is a button for sign up for monthly. You don't have to pay anything. Ignore the cost. Just go sign up monthly. Enter the discount code Speed Trader 14, and then you can sign up for 14 days. We don't need any credit card or anything. Just be with us for 2 weeks and see how our community is. And the code expires tonight at 10 p.m. So if you really want to give it a try, you should sign up now or by the next couple of hours that you have. I think that's the end of my presentation. I just wanted to thank Speed Trader again for the opportunity. I hope I can see a lot of you in our community. And as I mentioned, Speed Trader is one of the recommended and brokers that we have for our traders.
Thank you, Andrew. It's been a pleasure having this webinar for everyone today. Trading education is one of the things that reciprocates. It's never a guarantee of success, but given that trading is so hard, it helps improve your odds. And at a minimum, you get to do right by yourself because you're investing to learn what the professionals that do this on a day-to-day basis at hedge funds, mutual funds already know so that they can make profitable trades. So guys, a little bit of good news. We do have Louise Bedier who won today's raffle and will receive the gift from Andrew and us at Speed Trader. And with that in mind, Andrew, again, thank you for everything. Guys, thank you for attending today's webinar and have an awesome evening. Take care.